topic of today's discussion is investments and pivots during pandemic on fintech and blockchain. And we'll start with a brief introduction of our investor panelists. Manuel, could you please introduce yourself?
Okay. Hi, good morning everyone. My name is Manuel Serna. I am principal at InnoCels. InnoCels is the corporate venture capital of Banco Sabadell, which is the fourth largest Spanish bank with presence in UK and Mexico. And in InnoCels, we invest mainly in fintech companies to boost the digital transformation in the bank and the state's Series A, Series B.
Thank you, Manuel. And Dieter?
My name is Dieter Kondek. I'm based in Florida, USA, originally from Germany. I built businesses most all over the places, from Asia, Middle East, Africa. I'm representing Global Blockchain Ventures. We are a blockchain technology-focused VC and investing in fintech, medtech, IoT, entertainment, and headquarters in Orlando, Florida. I'm also founder and CEO of Emerging Minds International, which is a US market entry accelerator for European tech companies, also from the same areas. I'm a serial entrepreneur. I've done my life 4 exits, 1 IPO, and before I was a corporate executive with companies like IBM, Dell, and Tech Data. My target is here, since I moved to the US, to work on global collaborations. So I'm also in a couple of advisory boards at IOTA Foundation based in Berlin, which is a distributed ledger technology called the Tangle. I come later when we talk about investments and cases, very active. I'm also advisor at Fintech for Good. Xiang Sheng, who's the founder and CEO, he was here in this panel several times. It's a global blockchain and fintech network. We just announced our blockchain university. It's based in Washington, DC. I'm also advisor at Block Spaces, which is a venture studio in Tampa, Florida. I'm also advisor at Block Rocket, which is a German VC incubator and accelerator. And I'm just joined another fund, which is a healthcare fund based in Germany as advisor. It's called Medical Valley Convergence Fund based in Switzerland and Germany. In terms of blockchain, I'm involved there since 2015. I came in there through my kids because they start to buy Bitcoins and other cryptocurrencies. So I looked at this and found it very interesting. And so I was also co-author from a book called Blockchain in Healthcare. And next year I will announce my new book, which is pretty funny because it's spanned over more than 40 years. We'll call it From Mainframe, maybe some of you know what mainframes still are, to blockchain. Thank you.
Thank you, Dieter. And Brett, could you also introduce yourself?
Hello, excuse me, Brett Noyes, founder and director of Unventures. We originally started out as a fintech focused incubator program located in Silicon Valley. We've worked with 45 companies globally that are doing different aspects of fintech, financial inclusion with a heavy focus on blockchain. We actually, through our events, helped with the ICO of La Token, as well as launching Bankcore and a series of that. So we've kind of rode the wave. We are transitioning into an investor syndicate. So we work with over 400 VCs where we syndicate early stage deals. We're primarily focused on pre-seed and seed stage companies that are solving different aspects of financial inclusion globally.
Thank you. And Max, could you also introduce yourself?
Hi, this is Max. I'm from London. Actually, I'm Italian, I live in London. And so I'm the CEO and founder of HSMI. We are private equity, M&A, and corporate finance boutique. We work extensively with venture capital and startup SME worldwide. I'm an angel, I'm pretty much agnostic from pre-seed to seed. This is where I'm more focused on. Again, very much all the spectrum when it comes to startup, from fintech to medicals. When it comes to blockchain, for now still watching and see, more focus on fintech, but still not very much on blockchain, but absolutely welcome to talk today and even learning more from my colleagues, which for sure are much more advanced and much more knowledge when it comes to blockchain. Thank you.
Thank you, Max. And Thilo, could you also join the panel?
Yeah, the second German here in the call. My name is Thilo Bono. I'm the founder and CEO of Piabo PR. We are the leading technology PR firm here in continental Europe. We're helping a lot of fintech and blockchain companies and many other tech companies with all kind of public relations, social media, content marketing, influencer relations, companies that you might know, N26, the Sarah Challenger Bank, eToro, Stripe, many, of course, tech heavyweights also from Silicon Valley. And we are also invested in more than 10 venture capital funds all around the world, in Japan, in Singapore, in Vietnam, in the US, in Sweden, in Germany, of course, and in many other regions. So pretty good overview. And of course, also heavily invested in the fintech and blockchain space. So very curious to learn more about the amazing startups that we see today and to answer all the questions.
Perfect. Thank you so much, Thilo. And Manuel, could you share some recent cases of your investments with us?
In this moment, from our side, it's like we during the COVID, no, we started to make a process to support our portfolio and supporting them in through the navigate these moving waters and realizing the strategy, not for the medium term. No? Now in this moment, we are not invested since the COVID announced it in March, but we are advancing some deals that we are advancing. Accurately, and we hope to announce them in shortly. But in this moment, the approach was more support the portfolio, and one time the portfolio was solving, no? And they have the mid-term approach and business plan coated, going to exploring new opportunities to invest.
And what is in the focus of your investment strategy now? So what sectors you're mostly interested in?
Yeah, we were in this moment, we already focused on everything related with the SMEs and fintech, with SMEs market. It's like from our side, we are thinking that SMEs market is going to be disrupted until this moment. The banks now keep the main relationship with the SMEs owners, the CFOs of the companies. But now it's the revolution from the retail banking is going to the SMEs banking or commercial banking, and we are trying to identify the potential disruptors. We disintermediate the relationship between the banks and the SMEs. And where our approach will be to support these kind of companies that will we can make any kind of strong partnership, no, with which grant our relationship in the future with SMEs.
Okay, thank you. Mark, could you also share your case with us about your company, your strategy at the moment?
Yeah, sure. Hi, I'm Mark Rodrigues. I'm a general partner in Illuminate Financial. We're based predominantly in London and New York. I'm joining you today from New York City. We are a Series A investor in financial technology. I would say that we are a enterprise applications of fintech. We don't do B2C or retail payments and things like that. We're very much involved with infrastructure and wealth management and big data and decision analytics, among other things. We also have a business that involves advising large financial institutions who seem to have a bigger and increasingly big appetite for innovation and being around young companies. As you know, Barclays has their accelerator program, and there are many other incubators and corporate venture groups out there. We work with a number of them as they seem to want to get access to some of the energy and some of the talent and some of the thinking around innovation, which is probably good for everybody. And look, in observation right now, we have 2 funds right now. We have 12 investments out of our first fund. We just had 6 in the last 4 months, I guess. We had 6 rounds of additional financing that were all up rounds. So I think we have seen what has been noted by others out there, that this tragic event with the pandemic has actually acted as something of an accelerant for technical innovation. And I would say technical is probably a bad word. I think at the end of the day, you're trying to get friction out of the system, aren't you? If you're dealing with data or data taxonomy, or you're trying to improve time to revenue, or you're trying to improve customer service, I think at the end of the day, this is some form of efficiency or a retooling of an industry. And we're seeing that. We've seen that the large financial institutions have not let up or taken their foot off the gas at all. There was some hesitancy in the early going as all of us were trying to figure this out, but we have not seen a drop off in the number of young companies seeking investment capital, nor have we seen a drop off in the demand to consume any kind of technology or innovation that will allow the transformation of lots of legacy systems, of maybe a better customer experience and so forth. It seems as if many participants in the financial services industry, the practitioners, the balance sheet businesses, it's as if they got the memo, based on the last financial crisis over a decade ago, that began a process of relooking at everything from capital reserves to lines of business rationalization and location rationalization. It's as if that's all just accelerated now with this current world challenge. So it's an interesting time to be an investor.
Thank you, Mark. And Brett, could you also share your cases of investments?
Sure. So we've worked with in general, we work with a portfolio of different companies that are fundraising. Our companies are all generally in that pre-seed to seed stage, maybe up to Series A. As this has happened, we've seen, things have definitely gotten more difficult to fundraise, as anyone knows. But we've still seen the good companies manage to raise capital. We have definitely seen good companies, in our opinion, right, with cash flow and with product market fit, their valuations go down, not based on them, but on the outside circumstances. Just in general, we've seen it become more difficult. I think there was, in many regards, a need to reset on valuations and fundraising. I think this has been a bit extreme in the other direction, but hopefully we'll rebalance here in the next few months.
Thank you, Brett. And Dieter, what would be your story in terms of investments and your current focus?
Yes, as you know, we are looking for, this is why the name Global is in our fund name. So we are looking of global collaborations, and we are working together with other VCs in different areas, like in Switzerland, Crypto Valley with Blockchain Valley Ventures. We're working with 7 VC ventures from Andrew Roman. We are working with venture groups in Asia to find out outlier ventures in UK to find out the best deals. Then we try to do syndicate investments. We recently have invested in 3 fintech related investments beside our one is supply chain and logistics, which is the spin-off from Ethereum Group, which is Kaleido. Then we have invested in Consensus Health, which is a spin-off also from Ethereum, from Consensus. Our fintech investments is with Invenian Capital. It's a real estate tokenization company platform. Very interesting. We have invested in a new global online bank, which has a famous name called Medici Bank. They have a bank license now for the US and based in Puerto Rico, but they will go global, and we're using our global network of connections with others to help Medici to be one of the leading global banks. We have an investment in Mercury Cash, which was our first investment. It's a local trading platform for crypto and a wallet for people out of Latin America. They have their own trading platform based in Miami. And the goal was here, or the origin idea from the founder, Victor. There's a lot of coders and IT guys living in Latin America, in Venezuela and other countries where the local currency is not very stable. So they offered them a nice cryptocurrency platform to trade and hold their cash, because they get mostly cash in US dollar from Miami-based companies or Orlando companies where they work for. And they are pretty stable. They have survived the pandemic. I think the trading volume of more than 50 million at the moment, and they just applied for a bank license in Estonia. I think there's somebody from Estonia here on the panel. So our focus is now on a global base to look at new stuff. So we are watching what's going on in the global money transfer solutions, like, as you know, the success of TransferWise and Revolut coming from the UK and now have entered the US. We are looking at other banks like N26, who entered also originally from Germany. We look at big exchanges. I think the fintech and blockchain is overlapping other segments. So we are pretty interested in food and agriculture exchanges. So people, friends of our group, have started rice and coffee exchanges all over the world, where fintech plays a role for payment. We are looking at data marketplaces where you transfer data into revenues and money. Data coming from patients sell their information to other people, like healthcare. We are working with a company from Germany to energy management based on blockchain. And then we are looking for real estate and smart buildings. There will be a huge, we think, market in the future. Our strong relationship with IOTA brings us into the whole industrial IoT space, where money and payment will play a big role. There are several pilots with corporates here in the Connectory in Chicago, and also in Germany, Volkswagen, Bosch, working with IOTA to integrate the IOTA Tangle into the IoT manufacturing space, so that the car is paying their bills when it's ready and built in. There's a lot of going on. We have a lot of observation and where we want to invest in e-charging models. So there is another IOTA with Jaguar and Range Rover in the UK. And we are representing a German company for smart parking solutions, digital parking, where also parking will affect the cities and the mobility. Yeah, so you see it's a lot of activity what we are watching, and we are looking at our global partnerships to find the best solutions for our investors on a global scale, and invest in syndicates here with private offices, with family offices, and with other VC funds.
Great, thank you, Dieter. And Konstantin, could you also introduce yourself briefly, what your company is doing, and what is your current investment focus? And if there have been any recent investment cases, please also share with us.
Yes, hi colleagues, and I appreciate being here. I'm in New York, and you probably all see the news how crazy it is right now here. So there's definitely a pause, I would say, in the United States due to this uncertainties and a lot of other things. But we do see that some deals are still going on. There's a few deals, mostly in enterprise blockchains, and everything there is connected with privacy and time stamping projects like that. I think they're becoming more prevalent. Artificial intelligence that is trying to combat fake news or any other like deep fakes, as I'm sure you've seen now, it's also becoming a larger issues. And before, we haven't seen such a huge spike in where media basically formulates the large majority of the news still, and people are not able to identify whether like it's true or not. And the streaming and every other services are just making it worth. And because of the amount of information and data, like it's really hard to process it. So people lost like here a lot of faith in the modern media. And I think those projects who actually are trying to programmatically work on this issue and create an alternative solutions, I think those are going to be the unicorns, in my humble opinion. Now, on the fund of funds side, which we are, like, I represent Bitbull Capital, which is the first fund of funds in the crypto space. And we obviously due diligence still a lot of crypto hedge funds, and we've done so far probably 600 plus over the 2.5 years of our existence, from I would say 820 in the entire industry. So we know exactly what like I would say 2/3 of the entire hedge fund industry in this space are doing, and we receive all the time their updates, their performance, what they're investing, and we obviously also directly send those co-investment opportunities to our LPs. So those are most of the activities, alongside with also, just I would say thought leadership and research. And we work closely with, as previous speakers are saying, also we're working similarly with family offices. And nowadays there's a new interest from miners. So miners are trying to diversify their assets. So that's another interesting angle, which the new facilities are being built, and we are approached by several companies to assist with that. So yeah, I would say as still my big belief that Bitcoin and like similarly some crypto assets, and specifically stable coins, and I'm sure everyone's seen the proposals with digital dollar, right? And I think those are going to become also very hot topics, and not only on the level of private investment or institutional investors, but on the level of national currencies is going to be completely converted into stable coins. So this is, we're looking like very closely on this development, and yeah, I don't know the exact timeline, so I'm going to pause on that.
Thank you, Konstantin. And Max, could you also share what is in your current investment focus, and is there any recent cases you would like to share?
Sure. I mean, I'm not doing any investment now because I'm very focused. I mean, I've done for the last 6 months since January, a little bit because COVID. And so I start just, watching and see for at least the last 3 months. Also because I'm very busy structuring my first VC, which is very exciting because of my first one. And also it's an open-ended VC, it's not closed VC, so it'll be tricky to do because, making all the LP understanding what I want to do. And it's not that conventional. But again, we as an angel, I'm still talking to a lot of guys out there. I mean, we have an average between 10, 20 pitch per week. And I'm pretty much agnostic when it comes to investment. So more than be focused on one sector. And also because as an entrepreneur, for me, first of all comes execution before then any idea. And any idea can be good, can be bad. I do believe even a bad idea with a great team can be a success. On the other hand, a great idea with a not capable team and can't do nothing. That's my point. So, but again, because we have been moving from very dynamic economy, a more stable at-home economy. So we spent the last 2 months, myself 3 months, locked here in London, which is a lovely city alone, but stay home all the time is not the best thing to do. And I see a lot of guys moving, trying to make people home more active, more engaging. So I see a lot of platforms, especially when it comes to wellness, fitness, well-being, even platform, we go to medicals, try to help psychologically all people home, some kind of training, not only your body, but your mind first. And yeah, I mean, because I'm in London, of course, London, by far the biggest hub when it comes to fintech in Europe, probably one of the biggest in the world, with New York and Hong Kong and Singapore. And of course, I'm always very open to explore fintech and related or not blockchain and crypto. So I'm not that big fan of cryptocurrency, which means I like, but I'm not investing. I'm very much watching and see. And when it comes to blockchain, I've done any investment in blockchain so far. I've been very close to, but never. I'm not still very confident, and data can help me to be more in the coming days and weeks, months. But for me, I see so many projects in blockchain, billions of billions, but very few exit and very few success. So this is my concern. I mean, I think Europe in 2010 invested roughly 20 billion in blockchain. It's a big deal. I mean, 70% in 2010 was invested in fintech in Europe, Europe is very ahead in fintech. Probably the only sector where we can cope with America and China. But my concern is this project were very much consume a lot of money. There is no success. I mean, they fail after 1-2 years. So maybe, this is my personal opinion, because if you have 5 developers very confident home developing the structure, whatever it is, that's fine. But after, when you go to market, you need stakeholders, you need shareholders. You just don't need money. You need people actually can endorse what you're doing, and you need to give value. And this, for me, it's a big deal, because I didn't see any big success. I don't believe in the first 50 biggest fintech company startup now in Europe, there is no blockchain. That's my opinion. And so, I mean, it's a great, fascinating. I'm watching and see this sector, because by far probably is one of the most promising. And I think the European, I was reading some news a couple of days ago, in Europe is believed that by 2025, 10% of GDP will be stored in blockchain. It's a big deal, absolutely a big deal. But again, I'm a little bit, I'm a little bit concerned when it comes to exit. I would like to see more exit before me being involved. Thank you.
Thank you. And Thilo, could you also share your current interests in terms of investments and probably some recent cases with us?
Yeah, sure. Happy to do that. So I think the most recent case is really what's in the midst of the pandemic in March and signed in April. It is a company here based in Berlin, a blockchain company called ZK Systems. And what they do is equipment as a service. So they've one of the first real B2B business solutions. They're already working with big names like Bosch, for example, SAP. And I think equipment as a service is really becoming the most attractive business model in industrial manufacturing, and industrial machines such as medical technology, turbines, machines, robots are now being offered in service-based contracts instead of sold in one go. And thanks to equipment as a service, machine manufacturers can get a competitive advantage by meeting their customer needs better and developing kind of new business models, right? And so it's really fascinating. The company is on top of that run by a female founder and also a female CTO. I think also something very rare. So I'm quite bullish on this company. And so I think that's why they deserve a bit of attention and also funding also amidst of an epidemic. As I said, in exceptions and exceptional teams like this, I do direct investments with my family office, and otherwise I'm invested in more than 10 venture capital funds worldwide. Recent investment actually announced today is with one of the most successful Indonesian venture capital funds, Kejora, who launched a new fund. I'm also very happy about that. I think Asia, Southeast Asia is really an area and a territory that we should have in mind. In general, I'm personally interested in all things, of course, blockchain, fintech, AI, but also health tech, and many other area marketplaces too. And when you look at our portfolio, it's really a very broad range of services, also deep tech, always very fascinating. And for me personally, when I meet founders, when I meet teams, I usually really look at the classical 5T of investment, first of all, of course, the team, right? That's most important. If I don't feel there's a kind of personal connection and you also are willing to drink a beer with them, etc., then I wouldn't do it. Second T, of course, the traction, right? I have to see that there's already some traction, some response from the market, but also that I personally can provide value to the teams, to the companies. Third is, of course, also the timing. I've seen a lot of amazing technologies, but in the end of the day, if it's not the right timing, what does it say? What does it mean, right? It can be too early, it can be too late. That's definitely important. Then, of course, the technology itself is really something unique. Often, especially in AI, I see companies talking with me about AI, but when you do your due diligence, it's just a good piece of software, right? So it's not really, I mean, it's always tricky. And last but not least, of course, the 50 territory. I mean, if it's just a solution that works in one country or applies to a problem that has a certain market, geographical market, then I personally not so interested in. I'm really looking for companies and teams that really can be global success stories. And I think that case systems, for example, can be one of them. So I'm very bullish. And yeah, maybe also today in the pitch, we see some new great ideas that apply to these 5 Ts.
Thank you, Thilo. And Konstantin, you also wanted to comment on what Max was saying?
Yes, I just wanted to add, like, something like close to my heart, because I've been in this industry for 6 years, and it's hard to be a pioneer. And when somebody's saying that, and again, I don't take it personally, that there's not a lot of exits and good success stories, I would respectfully disagree. Why? Because, for example, like if you take some of the like obvious success stories, for example, you take Binance, where like Binance in 2018 like made more profit than Deutsche Bank. And I reminded that Deutsche Bank is an organization that was established in in 19th century, right? And Binance is an organization that is less than 10 years. So this is number one. They made over like $200 million, right, already. And Coinbase, which has already more than 25 million accounts, that's more than Charles Schwab, also very old and very established organization. So their valuations already are measured in billions. And those are like obviously the usual suspects. And we can take a look at the lending platforms like BlockFi, Celsius, Dharma. There's a lot of plenty good success stories. And I think it's just important for us to openly discuss it, because first of all, I think it's, even though we have those stories, and I can easily prove you with 5 to 10 examples, I think for other projects, which my colleagues were mentioning, it's early to talk about. Let's not forget the entire industry is 11 years old. So some of these cycles where companies like started their operations in like 3-4 years old, it's really hard to even value those, especially considering that a lot of the projects that are DeFi oriented, that are community oriented, they're not per se have like traditional shareholders, because their shareholders are the majority users. So, and they trust them. I think that's one of the most successful crowdfunding experiences that we've ever seen. Bitcoin is the #1 crowdfunding projects in the history of finance. So just take those things into account, I think it's important. And this is like just a friendly reply to the comment, right?
Thank you for your comment, Konstantin. And
thanks. Then let me thanks. Thanks, Konstantin.
Okay. So did you observe any, Brett, could you please share if you observed any changes in your current investment process due to the current situation? And have you seen any successful pivots in both in terms of portfolio management in investee companies, or maybe even in some of your peers?
Like there's a lot there. So first question was, have I seen any successes? Or what was the first question?
Yeah. Was there any change in the investment process?
Changes.
Mm-hmm. And was there any success case in terms of pivots in strategies or portfolio companies or peers?
Yeah. So I think back to the 5 T's. I mean, as far as process goes, right? No change in the process in which we look at companies, right? We're always looking for business builders and people that are fundamentally building companies. So as far as our investment process, that hasn't changed. I think sentiment around people investing in this space and all of the outside stuff has definitely changed. But as far as like, you should not. I fundamentally don't think you should change your process because of the outside circumstances. That like companies that I think that outside people are now, it's more and more in vogue for people to invest in companies that are cash flow positive or have revenue. So I think there's been a change in that. Those are things that we've always thought were important. So on our end, we haven't changed, but I feel like outside sentiment has changed. I think people are going back to fundamentals. A success case, I think, is a company we worked with earlier this year, CoinMe, which has been in the space since at least like 2014. We just feel like there was a really solid founder who has been through the ebbs and flows of this very turbulent, challenging, industry. And he was able to raise capital and continue he's expanding into more global, going from the US to global markets. And like the opportunity for that company is massive. And I just think that the companies that have real product market fit are able to, find that in, a global market are going to do really well.
Thank you, Brett. And Dieter, did you have any success stories in terms of pivots in your portfolios, or did you have any change in your investment process as well?
But the big change, as we all know, is now a lot of pitches are moving online with video chat. So especially when we invest in Europe, we can't travel, so we have to trust the video. And so, as you know, we like the 5 T's from Thilo, but we force them. The number one ingredients for a successful startup is a team, because we can add a lot of value for the teams when they focus on their companies with global connections and M&A activities and whatever is happening. Young people normally have not the connections to all the corporates which we have exactly. So my partners work for the NASA, for Disney, for other companies. So, and we like that. We like a lot the blockchain space, because to talk about a sentence which my friend Brock Pierce has recently on a big event says that blockchain is now getting out from theory into practical revenue generating solution. And we believe on this. So you will see a lot of activities here. So Kaleido team, where we invest, is the ex-IBM team in blockchain. So you are not leaving IBM at this time to do a startup in blockchain if you're not believing that there's something going on. As you know, Consensus, where we invest, are heavy hitters behind. And as we know, the internet is what I would call it for informations. It's not secure at all. Nothing what you're doing in the internet with payments and everything is real secure. The blockchain is secured per technology. And so we see a lot of stuff when it comes to fintech in blockchain, which is already implemented, the whole non-compliant and everything. So we think that startups should look on a global scale. They should have early traction in their home markets. It's very important to understand the product fit to market. And then they should think global expansions. This could be together with the investors. This could be to hire great mentors. There are a lot of good mentors on the market, or to work with corporates to get you into the global space and with the sales channels. And this is what we are mostly doing with. I mean, as you know, all the corporates have to innovate, and they don't have innovation inside. So they need the startups, and they have the money and the pilot and the exit. And when it comes to portfolio analysis, of course, in blockchain, you have to be very careful, in fintech too. And we have a great mentor team when you look at our website. So they help us a lot to get into decisions when we invest. But in the end, we are looking at the team and find out, are they what we have done in the past, scale companies and build them, and do they have the same vision and together with us? And then we don't see any change in behavior. Expect that you have not so much, as Thilo says, we are Germans, we like to sit and have a beer. That's not so much possible. So we have virtual beers. and check them out. So that's, but I hope it will. So I think Trump just announced maybe pretty soon we can travel again to Europe as Americans and the other way around. So.
Thank you, Dieter. And Thilo, what is your case? Dieter referred to you as well a couple of times, so probably you can share your story. So,
my personal story, you mean, or?
I mean, did you observe any pivots, success stories on the pivots in the strategy in line with your portfolio, or maybe you observed any changes in the investment process in the funds you are investor in?
Yeah. I mean, first of all, I see that really it's actually a good time to invest, because we see a lot of really pearls in the market. And of course, also some companies that maybe was a bit crazy when it comes to valuations and things like that. Things are cooling down a bit. And really the money, I feel, goes to the companies that are really valuable, and the pearls. And as we are investors, are all a little bit like truffle picks, right? It is good that the dust clears a bit, first of all. And I think a lot of founders been very quickly aware that there has to be a kind of adjustments. Obviously, if you have a business model in the B2C world, like travel or hospitality, that's not a good time. But I feel that in general, B2B companies are much more resilient. And this is definitely something that is helpful in these times. On the other hand, when it comes to B2B company sales cycles that maybe in the old times last year or so took maybe 6 months or longer, now decisions are made within 6 days, because the enterprise corporates feel the need of change. They feel that digitization, the pressure is on them. So they are very much open for new solutions when it comes to working from home, things like that. So I think, as always, where there's light, there's also shadow, and the other way around. And personally, here from Germany, I can say I'm here in Berlin. Things when you walk on the street, people smile, and you wouldn't feel that we are in the midst of a global pandemic. So I think here, at least in Germany, it goes slowly back to normal. I think within the next 2 or 3 months, things will massively, I think, clear up. And of course, there will be some winners, some losers. And I think the winners still are these ones who are flexible enough to have enough cash on the bank account, who are not right now looking for building, but still, I think there are great opportunities for investors there. When I look at the other funds that I'm with in Asia and also within the US, I mean, of course, the focus is first and foremost on the portfolio companies, what they need, and to see them. But still, there are opportunities for great investments, and there are great teams out there. I personally expect to see also more mergers and acquisitions in the next couple of months. I think there are also some great opportunities. So overall, I'm knocking on wood, bullish, as you can see, and I see more the glass half full than half empty.
Thank you, Thilo. And Brett, you also wanted to comment?
Yeah, I'd just like to add a comment on pivots. Generally kind of against that concept as a whole, but I have seen one that was good, and I don't think we know if it's good or not, right? One of our companies we worked with is non-blockchain, but in financial services. They adapted that. They had a AML and KYC product. They adapted it quickly so that they could process the PPP loans. It's a foot in the door. So like the gentleman just said, processes that we're taking would generally take 6 months, 18 months, or, we're suddenly done in weeks. So they've got their foot in the door. Now they're a vendor. So we will see if that's a good, pivot in the long run. But it almost validates that the original idea was not a good one, or it was not a good company. So I'm very skeptical of these companies that are suddenly changing their entire business model or product offering to serve the current need, right? I think that's something we're going to see. Do those companies, last in the long run? So that's my fear about companies that are pivoting for the current situation.
Well, thank you, Brett. And Mark, do you observe any success cases for pivots, or maybe you have some changes in your investment process?
Well, I think for as a Series A investor, one thing hasn't changed, and that is, we're looking for companies that have a demonstrated revenue and have a product or a platform or a service that is scalable and leverageable. So I think as a fundamental, that doesn't change even when there are external challenges. I think time to revenue is perhaps different. I think companies are distracted, or potential buyers of technology are distracted, and so it might take them longer to go through the sell cycle. It might take longer to do proof of concept and proof of value. It may take longer to deal with data or disparate data because people aren't available. It's one of the downsides of working from home. Sometimes it's more efficient if you need to iterate on something if you're physically near them. So there's things like that have made most of the investments, both in our portfolio companies, but also things we're looking at. They've all gone through cost cutting. They've tried to create a longer runway. They've tried to absorb as much uncertainty as they can. So there's been a lot of that kind of fundamental stuff. A lot of people looking for bridge financings to extend their time a little bit, because with, I think, young companies, you're always worried about time. But I wanted to go back to something else too that was brought up a minute ago about how fundamental the underlying drivers of change are right now. It was mentioned, Deutsche Bank was mentioned, and there's always somebody that's struggling the most, and Deutsche Bank is certainly not having its finest moments these days. But Deutsche Bank, based on traditional methods of keeping score, okay, a price to book ratio, is trading at 25 cents on the dollar. Now that means that the book value is not believed by the 50, 100, 200 equity research prognosticators, as well as bondholders that investigate the value of a company and its forward-looking strength. This is a public company, not a private company like tier one, or I should say, early Series A investments. No, these are public companies that are supposed to be very transparent and heavily researched. And yet there's a disagreement of such unbelievable proportions between the book value and the price. So it says that we can't even liquidate Deutsche Bank with confidence. We're going to lose 3/4 of our money just liquidating it. I mean, that's the statement, and it just shows you. I don't bring that up not to pick on Deutsche Bank, because a lot of financial services firms are poorly measured, or we don't know the real value. But it speaks to the appetite for better, more dynamic data. The reason why blockchain. You remember Bill Gates made a statement that says we tend to overestimate change in the next 1 to 3 years, and we underestimate change in the next 7 to 10 years. And that's certainly blockchain. I think there's been some hype early on. There was some disappointment. There were some cycles. People are still understanding private chains versus public chains. Digital assets are still getting organized in terms of how we might. But the great thing about something as ambitious as the blockchain concept and distributed ledger is that you can capture, unlike the example of Deutsche Bank using traditional accounting rules and traditional mark-to-market rules, which are wholly inadequate. With blockchain, I can at least begin to get into the richness and dynamics of data. I can understand not only value and price, but I can understand risk. I can understand operations. I can understand rules. I can understand counterparties, and I can understand all the friction that exists with settlement, pre and post trade settlement. There's all this richness that impacts the movement of capital and the movement of an exchange of assets in the global financial system. There's so much room for improvement. There's so many reasons to be optimistic. The problem likely will have to be solved an asset class at a time, because you need to codify all this stuff that's both written down and in people's heads. I mean, you need to create more confidence in the sort of the common pool of the various metrics of keeping score. But it's why we remain very optimistic in why we think you need a somewhat longer time horizon to understand how these things get adopted. But it helps to know that the ultimate buyers of these technologies, the ultimate users, these financial institutions, are quite hungry to improve. They're well aware of the inadequacy of traditional accounting rules and traditional ways of keeping score, even in public markets. And so we like the fact that they're open-minded about going to young, innovative companies that do probabilistic modeling, predictive modeling, try to solve for big data, and then try to capture the richness of flow with things like blockchain. We're quite keen on it. We think it should be driven by the business problem being solved probably as a starting point till we get more confidence in the system. It shouldn't be a technology-led sort of change agenda.
Thank you, Mark. And Max, do you have something to add in terms of your observations?
I mean, I agree very much with Mark. And I'm absolutely very in line with Konstantin said as well. But for me, when it comes to, for example, we have been talking about Deutsche Bank, it's so difficult. You can't compare private and public sector. There is no transparency in private. You can do whatever you like. I mean, yes, you need to publish your balance sheet and statement at the end of the year, and that's it. And public is very complicated. And when you run a public company, that's a different way to go. And we public sector company, the best company are trading 10, 15 times sometimes price on earning. We go to private, we are talking about 40, 50 times. I don't think private company are better than public company. But public, you are so much scrutinized. And again, you can't go short with the public. You can go short very much on public. And Elon Musk knows very well with Tesla, you can't go short with private. So two different, completely different words. And to me, I mean, I'm a big fan of public market. I'm a trader when I have some free time. And although the last 3 months has been a nightmare, but again, if I should look at the public market, it's all buy because still price is very low. And Deutsche Bank, I buy Deutsche Bank every day because I do believe it's back one day because it's too big, simply too big, and is so systemic for Germany that without Deutsche Bank, there is no Germany. So it's enough to buy for me. When it comes to my way to invest, I didn't change anything, absolutely nothing. The only thing I'm stressing to everyone is when you run a company, whatever is the stage from 1 year, 2 years, 3 months, you can't only be focused on the idea and the product and the service, and that's it. And you believe you go out because you're the best product in the world and people buy. No, I mean, even Ferrari, you need to push to be bought, although probably the most famous car in the world. And as I said to everyone, you need to be very much focused, especially now. COVID is telling you that how to manage cash, for example, is extremely important. Extremely, extremely important. If you run a company and you don't have in your account at least 3 months, 6 months run away, I mean, you are too vulnerable. I mean, you can go down in a matter of nothing. 3 months without selling, you are dead. Can you believe? I'm very frustrated if I'm giving you 500,000, 1 million, and you can't cope with, but you can start burning 100, 150 per month without any idea where you're going sometimes because you believe that after 1 year, someone else is coming with after 2 million, after 5 million, after 10 million. I mean, I've been reading Vision Fund CEO got 18 million in payout this year. This guy, they lost 18 billion in 1 month. So, I mean, it's very fascinating and sometimes very funny how venture capital, how it's moving and where it's moving. But again, coming back to execution, because I'm very focused on this with everyone and try to make them understanding that it's absolutely, I can't say everything, but it's 90% of what you're doing, especially when you go with A, B, C. You need to manage the company. You're not running an idea anymore. You need to move from idea to a company. And this is where a lot of people I'm talking to investing, they fail because they run 3 years old startup like was the day when they started. They are very much focused on idea, the value chain. They barely understand what the value chain means. And this extremely is something that has to be addressed. And again, I'm very much stressing them become manager and entrepreneurs, and not only disrupted idea put on the market and let's guess is, we are the next Facebook. Mark Zuckerberg has been very lucky. There is nothing to do. And or the next Uber, if Uber one day we start making some money. Thank you.
Thank you, Max. And Konstantin, do you have anything to add?
Yes, I do. It's an interesting debate because I think it's worthwhile adding, like, what if we're touching the context of the IPO. Because for me, when I did research, I wanted to help several companies also in tokenizing real estate and hospitality space to go through the alternative to the IPO. Like back in the days, you remember there was an STO, security token offering, which essentially almost like very similar because it's like a small IPO. And I just want to share with you some of the things that I'm sure you're all aware of, but just like worthwhile to remind that the IPO cost would be like in something measured in millions. And we're talking about like companies that have probably like at least the gross revenues of $2 million and 3 to 5 years operating history. So if you actually break down all the costs of an IPO, just and forget for a second, like, the benefits and advantages, which I'm sure we all acknowledge that there's a lot of great companies that are public and there's a great value of trading the public stocks, but you have at least 300 to 400K like pre-IPO costs. You have about 200K minimum, like, legal costs, like, and in New York, it's even higher, right? So you have a lot of like, a lot of costs, like, market preparation, investment bankers, consultants, like, all the auditors, like, and it totals like a lot of money. And plus you have to be eligible. And if not a good investment banker is picking you up, then you have a lot of limitations and they're going to chop off like a huge amount of your stocks. So what I'm trying to say that we're not talking about the traditional here, like, it's really hard to compare to traditional financing models because they're not accessible to everyone. If you're a young company and you are growing exponentially, imagine someone like Zoom or they are still going the traditional way. But imagine someone who does not want to take the route of Zoom, right? And they want to have alternatives. So now we have, back in the days it was ICO, which was, again, in many ways, it's a good idea with a poor implementation. And everyone was saying that. So with 80% of the companies that actually ended up in bankruptcy and all the investors suffered from this. That's not a good example. But the model, and now it's converted to IEO, initial exchange offering, right? There still exists, and I believe it's good to look at it like from the horizon of the long term that Mark was saying as an alternative, right? It's not a replacement, not at all, right? And there's still going to be public companies is still like big companies that are operating in traditional finance world, but for smaller firms who prefer to have a cheaper way to go still public and have this ability to benefit from I would say crowdfunding opportunities, I think the technology that we're talking about is an amazing route, and there are still experiments that should prove that this is a viable solution.
Thank you. And Manuel, will you add also?
Yeah, so from our side, it's like when we discuss continuing with the discussion about the public and private companies, when we discuss internally with our colleagues from the public markets, it's like we are really people from venture capital private markets. We are really lucky because we avoid the volatility of the short term. It's like, fortunately, in terms and linking with the previous question of pivots of the business, is like a private market. You have the support of your investor. Now you have enough cash in the bank to continue with your vision. It's like you don't need to pivot your model. It's like from our side, it's our portfolio companies. So some of them pivot their business model or more than use it a new context, not to push a new business line. For example, one of our companies were more focused in B2C payment app. They use this opportunity also to develop a B2B platform and licensing technology to using the third parties, not the digitalization of many parts of the economy to boost this new business line. Or, for example, one of our companies using the COVID or the situation more opportunistically. For example, one of our companies provide biometrical identification, more focus on for financial industries or legal, but they are developing a research project with some universities here in Spain and even with Cambridge to use the voice to identify the potential COVID positive. So I believe that if you have the support and enough cash in your bank account to continue with your business, fortunately the startups don't have to change their vision and pivot. Obviously, if you are conscious that the long-term context is going to change and the future situation that will help to your company to be successful, it will change also. You need to pivot, but from our side, and I believe that is the same for more blockchain, that startups will have more long-term approach in the market. I believe that many of them don't need to change their approach, because if they have the support of the founders to keep going with the development project.
Thank you very much, Manuel. And we start our pitch competition now. Bert, are you ready with your pitch deck? So yes. Please start with a brief introduction on yourself, and you have 5 minutes to go with your elevator pitch.
Hi, thanks. Do you hear me?
Yes.
Very good. Hi, greetings from Estonia, and thank you for having me. My name is Bertske, and I'm the founder of company Aufort. So Aufort is a gold fintech company with a purpose to bring gold to the masses. The problem is that for a retail customer, it's difficult to buy, sell, and redeem digital gold of physical investment gold in small quantities. For everyday people, current solutions have complicated account opening, high service fees, and it's not possible to redeem smaller physical gold bars. The minimums are way too high. For everyday people, current Aufort is developing a secure, easy to use, and affordable solution that is working on e-commerce platform. This solution is fully transparent and everyone is able to use it. With Aufort, it's possible to buy, sell, and redeem gold under the most flexible conditions on the market. Aufort is built on a disruptive blockchain technology that is combined with e-commerce platform. And customer benefits from it because it's easy to use due to e-commerce approach. It's cheaper, there is no production and shipping cost until it's redeemed for a physical gold bar, and it's more secure. And customer can sell his gold anytime with current world market price of gold, or redeem for a physical gold bar anytime already for 1 gram. And advanced users can exchange their gold to cryptocurrency, for instance, Bitcoin, and vice versa. As the system is built on running on e-commerce platform, buying gold in digital form is really easy and everyone can do it. The solution gives more transparency because if customer registers an account, he knows exactly how much the service costs and how it works. And there is no need to make any deposits, just click and buy. Also, the redemption of the physical gold bar is working the same and easy way, transparently and without any hidden fees. Customer knows what he pays for. Our main source of...
Bert, yes? Are you going to share slides also?
I'm sharing the slides.
No,
we can't see them?
No, we don't see it. Yeah.
All right, because I'm showing the slides. And it's connected.
Okay, Elena, do you see it?
No, I don't.
Could you try again? Share screen.
Wait a second, please. Checking. Because my slides are...
No, we can see it.
All right, so it disconnected somehow. All right, shall we start from the beginning?
Yeah.
Yep.
All right, full screen. All right, Alford is a gold fintech company with a purpose to bring gold to the masses. And the problem is that for a retail customer, it's very difficult to buy, sell, and redeem digital gold in physical form in small quantities. For everyday people, current solutions are complicated and account opening is difficult. There are high service fees and it's not possible to redeem small physical gold bars. The minimums are way too high. Alford is developing a secure, easy to use and affordable solution that is working on e-commerce platform. This solution is fully transparent and very easy to use. Everyone can do it. With Alford, it's possible to buy, sell, and redeem gold on the most flexible conditions on the market. Alford is built on a disruptive blockchain-based technology that is combined with e-commerce platform. That customer benefits from it because it's really easy to use due to e-commerce approach. It's cheaper. There is no production and shipping cost until it's taken out as a physical gold bar, and it's much more secure. Customers can sell their gold anytime back with current world market price of gold or redeem in a physical gold bar already from 1 gram. In addition, advanced users can trade their gold to cryptocurrency, for instance, Bitcoin, and vice versa. As the system is running on e-commerce platform, that makes buying gold very easy. Everyone can do it. And this solution gives much more transparency because before opening an account, customers can know how it works and how much the service costs. And also there is no need to make any deposits, just click and buy. Also, redemption for a physical gold bar is very easy. It works very transparently, and there is no hidden fees. Customer knows what he's paid for. Our main source of revenue is buy and sell fees, and we do it through easy to use online blockchain platform. To reach the mass, we are using disruptive education-based marketing, and we also use cost-effective affiliate marketing program to reach more people online. In addition, we cooperate with various well-known cryptocurrency exchanges to reach more advanced customers. The timing is very good because demand for gold is increasing greatly. Compared to last year's first quarter, demand for gold has increased almost 80%. Moreover, interest and demand for digital gold has increased almost 600%. That means and proves that we are on a right track. The market cap for tokenized gold is at the moment approximately 150 million. Next year, it will be around 1.2 billion, and in 2022, around 3.3 billion. And Alford's goal is to reach at least 1.5%, that is approximately 50 million. Few months ago, two very big and well-known companies, Tether and Paxos, launched also their gold-backed tokens. And compared to them, customer onboarding with Alford is much quicker and easier. With Alford, you can just click and buy. There is no need to deposit. That might take additional time and effort. In addition, with Alford, it's possible to buy directly with euros. There is no need to convert euros to dollars to make the purchase. Also, the minimum service fee in Alford is many times lower, and you can redeem your gold already for 1 gram. These are definitely the best conditions on the market. Alford has already traction with selling physical gold bars in Estonia, and we see great potential in the digital product solution to scale and expand globally. So in 2022, our estimated minimum turnover will be 50 million. We have young, solid, and motivated team who is ready to execute these ambitious goals. And we are also fortunate to have experienced and already successful entrepreneurs to advise us on the way to achieving these goals. We are involving a fourth investor to finalize the development of the platform and token and to start expanding it firstly in Europe. And we are currently raising 500K for 18% equity. Thank you, and I look forward to receiving your questions.
Thank you. And we pass the floor to Joseph, also to introduce himself and the project.
Hello, everyone. Could you hear me?
Yes. Could you share the screen?
Excellent. So I will share the screen. Great. So do you see the screen?
Yes.
Excellent. Great. So let's start. Hello, everyone. I would like to briefly introduce you our Refork project. Actually, it's not like a project. We are in quite advanced stage that I will introduce you. And we are basically a combination of the real world production and the crypto world. Something small about myself. I spent like 10 years in strategic consulting in like Pricewaterhouse, Deloitte, and other consulting firms. And then the founder of Refork asked me to join the project and develop it in a company from the startup. Our mission of the Refork is to, let's say, help the global plastic crisis, because we developed a unique material which is biodegradable, which is from wood, which is from the starch polymers, and we are certified. And the best thing is that we got our own patents about the unique production lines that I will talk to you later. Yeah, our vision is at least to reach like 10% of the market share in the cutlery business, but we can expand in more products than just the cutlery. This project is not only about myself and the founder, Josef Homola. There are more than like 20 people already behind, like I would say 15 FTEs and 20 people. And yeah, basically, what's the global crisis? Every one of you should know. Every one of you definitely knows. Like everyone is using plastics, especially due to the COVID and increasing of the e-shops and so on. And only 9% is recycled. And all of the plastics, like 40% of them, are used only single times. And once you throw it to the ground or anything else, it takes like up to 1,000 years to degrade in the soil. About our project, we already did some work in the past. We are invested over the €6 million, and we did our own R&D. We got materials that are degradable, that are even degradable in the soil. What's unique on our R&D that we combine on one hand side the polymer, which we buy on the market through our partnership with the German and Chinese companies, and on the other hand side we use wood, the wood as a base wood from the wood production, and we can combine them together in the quite high portion of the wood, roughly 75% of the wood. So basically we are super price competitive to any other competitor on the price. In terms of the production, we got already our own pilot production in the Czech Republic, supplying to the local market. And in terms of the marketing, we won several awards in the Czech Republic, like the Ion Globe Award. We've been the second one. And currently, we are developing our EFK token because we know that the problem is the global, our ambition is global, and we would like to find also global customers through our token community. Once we started, one gentleman talk about the value chain. If I speak about the value chain, we are basically in many steps of our value chain. We got our own R&D, we got our own unique technology that could produce our material. We got our own product development, product design. we got our own e-shop and salesmen that currently covering the Central Europe. And next week we are opening the distribution contract for the Kuwait, Germany, Austria, and Switzerland. In terms of our product portfolio, it's currently quite narrow. It's a cutlery, it's a straw, and it's a hookah mouth tip. So everything which is food oriented, and where we are going now, it's also to introduce to the market a biodegradable toothbrush, where we are developing a new business models, and we already tested toys. So basically, with our firm material, we can do almost anything we like. In terms of the competition, to our understanding, there's not such a competitor that could do such a material with us. There are competitors that use a pure starch or pure polymers, but basically starch is 10 times more expensive than the wood. So we would be definitely much more cost effective than anyone in the world so far. And what's unique on us that we are able to make our products on the machines that are used for plastics. So like injection molding machines, extrusion lines, just we need to amend them according to our research. So if I skip from the real world applications to the crypto, basically what I said, that we got our value chain from design, R&D till production and sales. On the other hand side, we got a crypto world. We developed the EFK token that someone could purchase. Then there are several functions that they can pay by the tokens for our products. They can even enter our community and develop the products with us from anywhere in the world. And we will definitely invest in such a product once other participants will vote for that. We got a function of the market support. So anyone who would invest in the token, we are, let's say, we are using our profit from the product sale also for the market or token stability. And in terms of the business area, we are also able to give some special rewards or special business options for anyone who pays by tokens and not by fiat. So basically our business model is anyone who pays by fiat token or hold some amount of the token could receive the better business options than anyone else who pays in fiat. So therefore, we are putting in favor the EFK tokens against the fiat. The other token functions you can find in our white paper. So I think that it's necessary to mention that Eco Kickstarter that I mentioned, reward programs, and also the branding. We are able to do the mass production for OEM branding. We are currently in discussion with the Czech local food chains that we would produce for them like products under their brand. And we are currently in discussion with other global brands like KFC or McDonald's and Burger King on Central European market, not on the global market yet. To our pricing of the token, currently we are doing the IEO, which would last for 2 months. We would like to list on the exchange on the 1st of August for the price of $0.04 US per EFK token, and the listing price would be 0.05. Yeah, basically is what's behind. I think that I hopefully I made it at 5 minutes. If I'm over, I'm so sorry, but shoot questions in case you like, and I'll answer anything I know.
Thank you, Joseph. And we have the third project today. Also, Arun, could you please share your project with us?
Okay, do you guys see it?
Yes.
Okay, great. Well, thank you for having me. My name is Arun Prakash. I'm with Cerebri AI. I'm the CFO and early investor and employee. And we are a company that's building an AI-driven customer experience platform for large enterprise. We have it in market today, and we've been around for about 4 years, based in Austin, Texas, Toronto, and Washington, DC. So the problem today is that the customer experience problem, or CX problem, that all large enterprises have is how to engage their customers, how to understand that engagement, and then how to drive it to revenue. It's not enough to just have some rules running around your systems to propose offers and actions, but you really need to understand customers individually and personalize what you deliver. And so now with the accelerant to drive it more and more to digital, this becomes more and more important to do in real time and with all the data you have. So we're providing that solution. The other thing that's going on is the customer interaction with vendors is no longer a single point of contact or even multi-channel. It's accelerated to omni-channel, in that the customer wants to have the same offer and the same approach, whether they're shopping on the mobile phone or they're in your bank branch or they're at your store. They want to be given the same thing. So omni-channel is the way to go. And to get omni-channel is not so simple, as the diagram will show, but it requires you to have a unified data approach across all these channels and make sure the customer's data gets digitally recorded at a quick speed as well. The market for these solutions, CX market, according to IDC, is going to be $500 billion this year across different things. In software, it's over 100 billion, and the fastest growing category in software is AI-driven customer engagement. We break down the customer experience into 3 key areas: tracking the customer, understanding the customer, and then engaging the customer. And in the area of understanding the customer, where we fit, the largest companies, the competitive landscape involves companies asking the customer, what do you think? So Qualtrics is sold to SAP for $8 billion, built on a foundation of surveying customers. Satmetrics has developed the NPS score, which has become pervasive. And then you have other companies using business rules to drive actions, which, like Pegasystems, which is a public software company that does a lot of adaptive business rules, but not the use of AI has not pervaded, or the use of customer data, first-party customer data, to really understand each customer individually at any point in time has not broken through yet, and that's what we're providing. The other thing right now is, in the post-COVID world, with global brands being the best positioned with capital, balance sheets, and innovation to drive this disruption, they can tailor solutions and offerings to customers. They can adapt and continue to drive the digital transformation they've already started. And then lastly, the economics matters now. We include macroeconomic data into our models for our customers, and now economics matters because no one expected the changes that happened this year, and they need to start projecting what's going to happen in the future. So our product is a whole product approach of ingesting data, customer data you see on the left, from events, transactions, interactions, demographic as well, but mostly around the journey and what happens over time, and building those customer journeys for each individual customer, measuring the customer with our patented Cerebri values measurement, which is a near-term indicator of future spend. It's the patent was just allowed 2 weeks ago, and then we drive recommended actions to bring revenue or accelerate KPIs for customers. We deliver it through UX as well with API. This is a look at the UX. So any user can use this, whether you're an individual contact center agent or salesperson, or you're a marketer who wants to roll up and scale thousands of customers for a certain campaign. But you get information on where the customer is scored, their Cerebri value, and the recommended next actions, as well as to drill down into customers. These are some just results and impact we made at our customers. We've worked with large banks, insurance, auto, and a central bank to forecast macroeconomic conditions in the country. And we've driven lift in all cases and different use cases, from lending to selling cars to getting insurance spend up. The team is an experienced team in startups and enterprise. Jean, my partner, has started 2 software companies prior to this, sold them both successfully. Alain is a prolific inventor and PhD and serial entrepreneur. My background is in control system design, but also private equity. Vasilis has been in financial services, data science for a long time, and James has been in enterprise sales and consulting for a long time. We have a team of 40 people across the 3 cities I mentioned earlier, Austin, Toronto, and DC, mostly in technology. And so we built a lot into our product, and now we're ready to take the next level to scale and to market this to more. So we've signed about 1.3 million in ARR with 3 big customers. We have 3 major pilots going on right now that will end by the end of Q3, and we expect them to drive us over 5 million of signed ARR. And we've solved a lot of sales problems in the enterprise, which is the monolithic data structures are hard to move the projects forward. We have a steam engine, what we call it, to understand the data better and to break it down. There's a lot of talk about data science teams using open source technologies. We've actually built an optimizer to use our technology, our proprietary AI against open source and show the results so that our customers can see that we're better. And then, of course, we've got reference accounts now, so we can go into the market and sell a lot better. We spend just under 500K a month, and we are going to raise $4 million to get us to the cash flow break even. We spent a lot of money to build this product, and a lot of things have changed in COVID. We had some acquisition offers and some larger financings go away, unfortunately, but we still have a strong management team and company ready to go. So we're raising money at a bit of a lower valuation than we had before, but it's still quite attractive for us, and the insiders are very motivated to do this deal. So we'd like to raise this funding as soon as possible to keep going on our journey. And that's it. And again, here's my info, and appreciate your interest.
Thank you. So we get back now to the round of feedbacks from our investor panel. Brett, are you ready to give the feedback for all 3 projects?
You guys are both on mute.
Yeah, you're muted.
Yep, so
Yeah.
I couldn't hear you there for a second. Yeah, give me a little context. It's always hard to be the first one. How do we want to give some feedback here? No, just go for it. I'll be more critical than positive, which is not my intention here, but all for it. I don't know that I fully grasp that this was a really big problem that needed to be solved. So that'd be my main feedback. Yeah, I think that's really what it came down to. I just didn't really buy into the problem. Refork, loved what you were doing as far as high level, the problem you're solving. It seems like a global problem. It seems like something would buy. I really didn't fully connect why a token was needed. It felt like a nice to have. If it's purely a funding mechanism, that makes sense to me. But I don't know if I fundamentally buy that people are going to buy the token to buy the product. So I kind of got lost there. And last, Sarabi, in general, I like what you're doing. I understand the problem. We're not generally, focused on enterprise, so it feels like it's not a fit for me. What I would say as far as feedback, the one thing that stuck out to me, I was really liked it until you started to explain to me challenges with your balance sheet. Right, and the cap table. That's for me as an investor to find out for myself. I wouldn't necessarily be as transparent. I mean, maybe that's bad advice, but it's it's for me to get in there. It looks like the team's great. There's all these other things that I like about it. And then you're kind of putting at the forefront right at the end that, hey, here are our challenges, right? And it's I feel like you got a good story of why, but it just suddenly I have a red flag that I didn't have before you said that. So that's my overall feedback.
Thank you very much, Brett. Mark, are you ready?
Apparently I wasn't ready. I didn't hit the mute button at the ready. Yeah, I thought all 3 were good presentations. I mean, some of them I don't know. I'm old enough to know what I don't know. So if in the area of plastics and plastic replacements, I like the cause. It shows heart. But I don't understand. I don't know that business well, so it would be I'd be misplaced in either criticizing or praising. But my millennial children tell me it's an issue, so it must be. So that's intriguing. I think on the blockchain around gold, I think that plays to some comments we made before the pitch presentations. I do think that asset classes need to, I think it's sort of a bottom-up approach to blockchain. I don't know if, I guess, so it's intriguing. I would have from here lots of questions. I thought the argument was laid out well. And it does seem like a flight to safety, or at least alternative forms of currency in a crisis. So I think there's a lot of compelling things there, but more to understand. And then the last pitch, I just have more questions. It does seem always good for the customer experience to be broken down and to be more digital. I didn't understand, I guess it might not be the speaker's fault. I didn't understand some of the cross-industry applicability. I'm a financial services, a committed person. It's what I know best. So I'm always a little bit reluctant or unsure when I'm looking cross-industry solutions. So I don't know if similarly this kind of work would benefit by an industry first focus. Doesn't have to be the one I engage in financial services. It could be anyone. I don't know if that's an easier play than the way it was coming across the more generalist play. That'd be my feedback.
Thank you, Mark. And Max?
Yes. I mean, let me try to name each of them. So, but I mean, that's a bit gold. I mean, big fan of gold. Now, yes, you're right. Gold is pretty much increasing day by day because of COVID. Probably we reached the peak and maybe it's going back. First, the pitch. Please be a little bit more clear because it's been a little bit challenging for me to understand. And it's very important we have 5 minutes, use them as best as you can. And don't make investors be too much focused on understanding, and so you don't get the right of the business. I mean, it's a little bit vague in terms of business model. And again, yes, digital gold, it's a big deal. But for me, personally, I see Bitcoin as already a digital asset, more than a currency, more than a way to exchange value. As long as, for me, in terms of using Bitcoins and using crypto for payments, I buy Bitcoin quite often, but only because I use it as a store of value, like I buy gold. Now, you're associating both of them. I don't know how very much it can work. And I'm not talking about the blockchain and involved, but again, it's a big market, but I don't know how well you can play on it. And again, when it comes to business model, it would be nice to know a little bit more in terms of exactly how you break down, how do you reach your customers, and how you manage your cash flow, and how you charge, because charging only on transaction, this is almost what everyone does. It would be nice to see some different model, how to extrapolate value from business, because I've seen a lot of new ideas, but it's always the same. We charge on transaction. So it would be nice to see something different. Also because you are using a lot of technology. So try to use technology also to find a new way to make money, because in the end of the day, you need to make money. When it comes to Joseph, I mean, I'm a big fan of impact. I do believe all of us, we should do a lot more. I was talking to a guy working in package. He hated me because I say we should remove all the package, all of them. I'm not going to buy toothpaste with all this package. I throw away, please. I just need the first, and I don't need all the plastic and all this kind of, And for example, in Sweden, I think, or North of Europe, they're trying to sell in store without all these packages, because this is where we are destroying our ecosystem. And it would be nice to know a little bit more when it comes to your supply chain. You're using wood. I was watching the TV last week, and in Russia and Ukraine, I think the Chinese, they're buying everything when it comes to wood. so the price is going up a lot. So maybe this can be something that can, in somehow, gives you some problem, because in the end of the day you need to buy wood to create this one. And also how far they can go in terms of how many you are now creating fork. I mean, this is pretty much what you need when you have your meal, and which other product you can build. And when it comes to the last one, yeah, customer experience, it's a big deal. I'm not that much familiar, and using AI, we try to use AI in everything now, because much, in somehow AI should make our life easier. I agree with Mark. This is my last. I'm a little bit concerned when it comes to go from one sector to another and try to create something that maybe actually can apply to everyone. And what would be nice to understand if when you need to switch from finance to cars, for example, to how much does it cost to you and how much does it cost to the clients? Because you need to do some kind of adjustment, I presume. For me, it's okay.
Thank you. And Dieter?
Yes, Ben, my feedback. I'm not an expert in this segment. It's a very special segment. But we have partners in our GP group who are expert in this. So I would like to dig into this with them. Overall, I like all three pitches. So as an investor, I got it. I got the message. So I like the pitches of all three, even as Ben has a slow start without the slides. Joseph's solution, of course, we are big fans of impact investing, but I think that's a very crowded space. I think a lot of people are going into this space. Focus is in the moment, of course, in Europe. Americans are trying to be more sustainable, but this will take some time. And so I don't know if this would be something where our group would invest in, but I know a lot of impact investor groups, VCs, private equity, family offices in Europe who like the space a lot. Third one, that's what we like most. So this is fitting into our investment space. It's also very crowded, of course, but the whole B2B enterprise space has a huge scalability. It's great for exits because all the big guys like Oracle and SAP and whoever mentioned need this kind of companies. So I think very attractive team. So the team, Aaron, is outstanding. Of course, you have a big fortune to be in Austin because there's a lot of going on in this space. I'm sitting in a board in another B2B software company in Austin. I know how great mentors they are, and I work for Dell, so there's a lot of influence from Dell in this area and others. So I would definitely get this pitch and the information into my GP partners and have a closer look. But even if my GP partners decline, I would recommend some other VCs who could be interesting for this space. So we like it a lot, and I think there's a big global scalability with this business model.
Thank you, Dieter. And Manuel?
Okay, so thank you guys for the three projects for sharing with us. The three are very interesting. Starting with Offord, from our side, it's like the other members say that gold is really interesting, and furthermore it's really complex enough for retail investors to buy gold. And furthermore in this current situation, when the gold is a refugee commodity, my feedback, it's super interesting market, but I don't know how much of the demand of the gold in this moment from retail market for retail segment is going to be circumstantial with the COVID, and furthermore how it's going to change, disappear after that. And furthermore, one point is maybe, I don't know if you are thinking about to develop a B2B platform. It's like when you go directly to acquire retail customers, really expensive, and I don't know how much professional, no, or it's going to be your customer segment in terms of they are part of a community, investor community, no, or they are retail investor, like could be my parents, for example, or my closer friends outside the financial interest, no. So it's this kind of people usually is really expensive to acquire. So I suggest to maybe to analyze in depth the unit economics and consider maybe to develop a potential B2B platform or white label. Could be interesting, no? Like you can distribute your solution through partners, like for example, it's a strategy that Robot follows, no, here in Europe, using the third party to distribute to offer the users to exchange gold, no, and you share with them. It's share with them a part of your revenues, and it's more easy from your side, no, because you don't have to acquire the user base that is very complex and really expensive. But the approach it's really interesting, no, Famo, in this moment. Waiting with your fork, it's really interesting. It's like from my point, I personally am really interested in active investment, and I know that the future we need to change a lot of things, no, in the short medium term to if you want to get sustainable in the long term. But from Innocell, it's not our core business. It's out of investment thesis. But only one feedback. It's like, I don't know how much. I know I understand that with the token, no, you want to increase the engagement from the users to the product, and to more. It's like get a stronger link with the philosophy. But I don't know how much familiar. At this kind of the retail, the long tail of people with tokens, and furthermore, I don't know from investment or to investors, no, if can create more a disturbing noise, no, because it's like, why you need a token if you want to create a new kind of or do you want to decrease the plastic use in to make instruments, but it's the approach in the market is interesting. It's only to consider if the user it's going to understand the token and find out how much noise make to the potential investor, not to disturb them from the most important, that is your new tech or your new process, not to create the product without plastic. For the last one, Shibre, well, very interesting for us as a corporate venture capital. This kind of solution make a lot of sense for us. We know how painful it is for us to track all the data process, no, and knowing which point of the deal flow, the funnel, no? The funnel is the user, no? It's very complex because as you know, you mentioned previously, the data lakes are independent, etc., etc. So from our side, well, we are happy to have another call after that to understand better, because we are interested. Here, one feedback because we need to know more about the company to share a feedback. But from our side, or when we try to implement this kind of solution, it's usually this kind of platform end-to-end are really complex, no, for implemented internally in the banks, no? Because we don't have. It's like we never start from scratch. We always have some kind of internal solutions, no? It's like maybe with your platform we can only one solution for all the process, no? And maybe we are now like 20 proprietary application, not to make the same, and it's really confusing. It's not the best, but sometimes when you go to directly to, okay, you have all the project or all this application that you have and you are using this moment, you have to through to the trust and install my solution from scratch. it's really difficult in terms of sales cycling, and you need a lot of sponsorship from the top management, depending the range of how relevant is the project. So if you can identify, my feedback is if you can identify a real pain point of the project, of the process, no, and starting to solve this a small pain point of the loan value chain, no, but enter and to solve a very painful, a really pain in the process, and after that you can expand it, no, and I could be finishing being end to end, no, but usually the approach of replace all the legacy platform from my new platform, I'm sure that is going to be better, but it's really difficult to sell internally.
Thank you. And Konstantin?
Yes. So I'll try not to repeat what my colleagues are saying, so I'll try to go briefly. So in terms of the efforts, I like the narrative, like generally, like I think gold and digital assets are very good, like in terms of the store value combination, and definitely I like the fact that you're delivering and that you're insuring the goods and the market cap. I wanted to ask, like, how did you measure the market cap? Because I've seen two of your competitors, and I've seen different market cap valuations. So that's like an open question just for the future. I think that, you know, the presentation was good. The 2 cents on how it can be improved, like, you know, there are definitely more competitors in this field. So I guess it makes sense to mention them and to understand that, you know, that they exist, because I didn't hear that. I've heard some of them, but I know they're like, you know, very, very similar companies who are doing like your model. But at the same time, gold is $9 trillion size market, so there's a place for everyone. What I didn't understand, like, how legal and compliant is your referral program in terms of this? So that will be interesting. Like, so if you're just selling the physical goods, I understand that, but if there's more to that, that's a different story. And I didn't also understand the digital component of, like, you know, if there's a token or not, and because a lot of, you know, the crypto narrative is also like you're buying tokenized equity, right? If there's no, so this is more of a private equity deal. The good thing I should say that, you know, 500K for 80% equity, it's you know, I think it's more or less reasonable, and you know, every VC would probably negotiate that. But that's my 2 cents, not to repeat whatever my colleagues were saying. In terms of the Refork project, again, as a millennial, I love the cause, and I think is you know, it's definitely relevant, and I see you guys will have a very bright future. And I think the fact that you mentioned they already have existing contracts, and the technology is developed, and I would say in a very progressive way, and that's very, very helpful. And you did a great presentation in terms of technology, but I went, like, when I was hearing your pitch, like, you know, I ended up with the feeling that it's more of a private equity opportunity, because I didn't understand at all, like, I was not clear about the token component. What's the type of the token? What's the benefit of investing, right, in this? Like, you know, what are the potential gains? Again, I realize that in 5 minutes, it's nearly too impossible to convey everything, but same, you know, geographical positioning, like, you know, of the projects, both, by the way, for Forward and Refork, is important, because for someone who is in the United States, even though I'm originally from Europe, it's just tough to even consider some of the projects that are like oriented mostly on the European markets, like I would say predominantly. Now, as for the last speaker, Arun, so the CVX platform, I love the, first of all, I love the team. I think it's like, you know, looks like a very, very solid and institutional grade team and with great success. And I love the idea, and I kind of understand what the message you convey. Obviously, anything right now, you add AI to anything, it's already sexy. So, but what I do share similar concerns. I think Brett mentioned it. Like, I think it was a little bit preliminary. You gave like too much information before like someone asked it. Like, I would actually focus on your benefits, and basically, try to say, well, we've changed the valuation just to attract the money probably faster, and we understand that the whatever, maybe global recession and pandemics is just another way to go to provide more, to share more with our investors to win a long-term partner. That's how we just like portray it.
Just a friendly advice, and I think you're still going to be successful, and I love what you're doing. So 2 solid projects, and I think they definitely have like small things to improve. If I were to summarize them, largely on the component of just trying to convey like an elevator pitch, why us. For the refork, I would say like it's great, but also try to put the narrative like what's in it for the investor. That's, I would just summarize. Otherwise, it was great in terms of technology, and it was clearly it's a valuable like cause that we're talking about. And for the CVX, I would just say that just focus on your strength, and I'm sure that you already have income, you already have great customers, so just try to sell that more, right? And and the funny thing, when I was trying to find you the CVX, I remember that the first thing popped in my mind, there was a Chevron stocks. So that's interesting to understand why. Like, I understand you're in Austin, so maybe that's why the name. But anyway, just a little bit of humor. I will not take more of your time. Thank you.
Thank you, Konstantin. And Thilo?
Yeah, I try to make it short. The gold topic, project number 1. I'm not sure about the actual market size and how big the opportunity really is, but I like it. And it was a good, solid presentation, and definitely a good solution to a problem. The second project, I think it's really a fantastic idea, a great market, and really also in this time a good timing to coming up with that. I'm not sure about if we mix this token approach. I was a bit irritated about the connection between the token and the actual product, but it's a fantastic idea, and definitely the right timing. Project number 3, the AI project. Just maybe a short tip. Try to really rethink your presentation. There was a lot of information. The slides was very, very crowded. Maybe in the future, when you just have 5 minutes, try to make it a little bit easier to understand and to sell, because I think you're an amazing company, amazing team, but the slides are a bit overwhelming, let's say it that way. But every 3 projects, amazing founders, great ideas, and very curious who will be the winner.
Thank you, Thilo. And the winner is Arun Prakash, CFO of Cerebri AI. So congratulations to you, Arun. And thank you all of the speakers and panelists and projects today. You are welcome to join our further on roadshows, panel discussions, fireside chats, and startup leader clubs. And in an hour, we'll have a fireside chat of make or break, is this the digital assets moment? Followed by a keynote on disrupting finance and a fireside chat on investing and building the future of food tech. So we all invite you to join, and all the best for today. And please follow up in one-to-one communications with the projects. Contact each other via LinkedIn and the contacts you shared to each other here.